Hello, good morning. It's Tuesday the 15th. I'm FX Plu and this is the market brief. So we've got employment data due out today. Jobs data seems to have settled into a range that's quietly positive. But this January's data is not expected to have much effect on the market. Tomorrow's inflation data, that's much more likely to see a market reaction. That's only forecast for a slight rise in January, which means that price rises may be starting to moderate. That can't be said for the price of petrol though. Whew, that's averaging at 151 now. Not to sound too smuggy McGee about it, but I filled up at 141 last night. So if you fancy some of that bargain basement banter, you know what to do. What is it? Like, share, subscribe, tag five friends in the comments below, and you'll get a discount code or something like that. If only I were a YouTube influencer. So yeah, none of that. It was at Tesco's on the southbound A3 opposite the golf course. Anyway, you know me, I'm not one to play the blame game, but at least some of that higher pricing is being attributed to the tensions on the Ukrainian border, and why not? They're still talking up this week as one of very high risk while they continue all the diplomatic efforts with those nasty Russians. For now though, sterling remains range bound in a pretty narrow range as it waits for some data to trade on. We slipped to 134.90 against the dollar and we open around 119.60 against the euro. Over in the US, the expectation is growing that we'll see the Fed kick off with a 0.5% rate hike at their next meeting. Some Fed members are even talking up 0.5% hikes at the next two meetings. That really leans into the sentiment that they are playing catch up now. But wider sentiment is growing that the Fed does want to regain control of inflation pretty quickly, and indeed that it's also prepared to shock the market in the process, and a 1% rate hike over the two meetings would certainly do that, as it would be a risk to growth and activity. Some more dovish analysts even fear that hitting the brakes that hard could push the economy into recession. Negative Nellies. The Fed can't quite get past accusations at the moment that they really should have got their act together and started a bit sooner. But hey ho, here we go. 50 basis points in March is looking pretty likely. Personally, don't think we'll see a second consecutive hike that soon, of that size anyway, but I may be wrong. Been wrong many times before. Not that we're keeping score in the sweepstake, of course. That is just for fun. In the market, the dollar index remains in a relatively narrow trading range at the moment. We saw 96.45 on the high side yesterday, and euro dollar, well, that opens this morning around 113.15. Have a great day.
If you do not have a clue, then just tweet through and ask FX Blue.